invest in and follow principles. That has proved to be pretty successful.
This landlord's gonna make almost $2 million over the next 12 years for doing something one time. And that's like residual. This guy's got another 7 retail spaces and he's got 10 stories of apartments above it. And I'm like, man, I'm on the wrong side of the coin, right? I need to own real estate, not broker it.
You start doing deals that are absolutely life-changing, like that put you on the path for intergenerational wealth.
Welcome to the Real Estate HomeRuns podcast. I am your host, Luis Vanderhorst. This is a podcast for busy professionals who want to learn about passive income producing strategies that have helped others crush it in the real estate world. Whether you are a new or seasoned real estate investor, this is the podcast for you. I'm excited to get to know you more, George, and to introduce you to my audience.
Awesome, man. Awesome. Well, yeah, I'm excited as well.
Yeah. So tell us a little bit more about your background.
Born and raised in South Florida, actually.
Okay.
Started doing single family real estate there. Moved to Dallas after the real estate crash. So 2008, moved to Dallas. Kept doing single family real estate, started doing some small multifamily, and finally about 4 years ago started focusing more on large syndications, 100 plus apartment complexes.
Okay. And what was that shift or motivating factor to go from residential to now commercial and large apartments? Or because of the recession?
Yeah, after the recession, didn't get too hard, hit too hard during the recession, mainly because we were doing a lot of wholesaling and some flips. So didn't have too many properties that we were holding on to. And then the prices got so bad in South Florida. I mean, it was dropping daily. Couldn't really do anything right in the beginning. And with real estate being, full time at that point, decided to look into other areas. We looked into Dallas, and it was pretty stable, night and day compared to South Florida.
Okay.
So we made that move, and a couple years after that, I decided to open the construction company. And that was to scale the single family was the idea, which it did help to take our fix and flips to the next level. And then, like I mentioned, 4 years ago, 3.5, 4 years ago, I kind of looked back at what I had done and kind of just felt like I was, I had to be working in the business every single day, writing it out. And at that point, I was already starting to build a family, and I realized that I needed to put more systems in places. I needed to have some more passive income and be able to gain that time back to spend with my family. So that's what made me start looking more into multifamily. And same with the construction, started focusing our services more on multifamily and commercial. And with the different clientele base and the different investment strategies, I've been able to gain that time with my family.
That's good. So as a result of that, the construction company was born. You came up with systems to better what you were doing. Would you mind giving some practical ways that you implemented systems to free up your time and be able to leverage what you're doing?
Yeah, I mean, I think it starts, well, yeah, I guess it does start with systems. So I was going to say it starts with the right people, kind of go hand in hand. You can have the right teammate, but if you don't have the proper systems, it may not work out. So yeah, I guess I can start with the systems first. And, one thing that I noticed was using software and being able to automate a lot of the functions, definitely helps free up time, and it allows me to be able to track certain KPIs where, you know, my team is reporting to me weekly, and I can kind of keep a track on those KPIs and jump in front of anything that's not looking right before it's too late. So in that sense, it helped. And then once I felt like I had the proper systems, then it was finding the right team. You know, and that in itself is a struggle, but once you do find the right person and you put them in the right seat, it makes a world of difference.
Yeah, A players for those positions that you need fill.
Yep.
That's good. Yeah, and did you always see a construction company as another step or another subcategory within your big company, or that was just a need that you saw arise through the flips that you were doing and the wholesaling, and then where you wanted to see things go down the line?
Yeah, no, that's a great question, man. It came as a need. You know, it wasn't something that was thought of before. As part of the master plan. The master plan was to scale the single family flips, and couldn't find a good contractor to help me do that. So I decided to open the construction company. Now though, it's more part of the plan with the multifamily. You know, it works hand in hand. And I think multifamily in general kind of works that way. You know, when you bring in property management in-house, it's kind of the same idea, which is probably something down the line for us.
Yeah. Okay. And are most of your investments in the Dallas area that your crew works on, or you will have sometimes your crew, your construction crew, fly to different places to work on the projects there, or it all depends on the partnerships even that is in place?
All of the above.
All of the above.
No, you know, we have crews stationed in Dallas, and then we also have staff in Houston. So Dallas and Houston are our busiest, where we have the most work. But then we do have jobs throughout Texas and throughout Oklahoma. We've come up with a good system to mobilize and get those jobs done. And our crews are willing to travel to get it done.
Nice. What would you say has been your biggest accomplishment up to date with what you have done in real estate?
Man, up to date, my biggest accomplishment in real estate. I would have to say it would be making that transition from single family to multifamily, and deciding to stick with it. You know, in the beginning, I was doing both the single family and the multifamily, and I was spread too thin. Same with the construction company. I was doing residential, I was doing multifamily, I was doing commercial. When I decided to kind of trim that down and focus a little bit more, you know, focus solely on multifamily investing, focus solely on multifamily renovations and commercial, that's really when things started to take off.
Yeah. It doesn't seem like it's an easy transition to go from thinking in residential and transaction based, so now tackling several millions of dollar deals or several doors. Did you what was that transition like to start thinking bigger even and then implementing that idea?
Yeah, no, I mean, it was a difficult transition for sure. You know, one, the numbers, getting used to dealing with millions, like it's nothing, you know?
Yeah.
You know, $40 million acquisition here, $90 million acquisition here. I mean, so that was one, just getting over the large numbers. And the fact that you're putting a lot more work into one deal, but that one deal is going to pay you out several different ways, and it's going to create passive income for you. It's going to create cash flow, all these different things, versus working on several smaller deals that, in my case, were just creating, you know, one transaction, getting paid once.
Yeah.
So that was probably the biggest transition. You know, not getting paid all the time, you know, from transaction to transaction.
Yeah.
Which I know is one thing a lot of investors struggle with. A lot of investors trying to make that leap over to multifamily, especially if they're trying to do it full time.
Yeah, that can be a big leap, but with the right people in mind and also in your network, it seems doable. The one thing that I wanted to ask too was your first large apartment deal like that done as a GP or as an LP?
No, it was done right around the same time. I want to say maybe LP.
Okay.
In one LP, and then right after I closed on the first syndication deal. Yeah, I wanted to invest passively, and I wanted to see the other side of it. You know, I had never raised equity before, so
yeah,
I definitely wanted to. I had never raised equity before, and I had never invested passively. So yeah, I went and I deployed some of the funds I had and invested passively, but at the same time, I was still looking for deals. So it kind of happened simultaneously.
It's good to know. Yeah. Awesome. What are some things that you look for in partners that you bring in for some of these deals? What are some things that stand out, maybe as a red flag, or things that are like positives? And also, if you could go into detail, like what type of class types you look for, A, B, or deal structure.
For sure. So I mean, starting with the first question, you know, as far as the partners and co-GPs, I think the first thing I look for is this someone I can get along with? You know, is it someone that, you know, you can be married to this person for however long that deal ends up being? So do you have the same morals? Can you work through things? So that's probably the first. And then the second thing would be, okay, so how do we complement each other? You know, what can this individual bring and help us with, and what can we bring to them, and how can we add value to them? And if there's good synergy there, then it's kind of, you know, taking it to the next step, maybe meeting each other's teams and just making sure everything will work. And so yeah, that's the first part. You know, that's how I've found the co-GPs that I've got on our deals now. And then as far as the type of properties, so mainly work with C class and starting to do some more B class now as far as multifamily properties.
Okay.
like to be at 100 plus units at the minimum. And then before COVID, a lot of value add, heavy value add, you know, with the construction company, leveraging that we have that in-house. Now, the way bridge loans are going, you know, till those get a little better as far as terms, we're looking for more cash value deals, or where there's a true opportunity there. If you know, somebody's running into an issue with collections, but the occupancy is still somewhat high, so we don't have to come in with a bridge loan that has really bad terms. Those are the kind of deals we're looking for now.
Okay. And you invest in Oklahoma, Texas, but open to other areas around the country as well, as long as that criteria.
We've looked at stuff in Georgia. We've looked at stuff in North Florida, Carolinas, and then we've actually got we got one deal that we're raising for right now in South Dakota, and then seems like we just landed another one there too. So we'll have two over in South Dakota. And yeah, just open to go where the deal is, and if you know we like the market and we feel confident we can execute, then make it happen.
Awesome. What have you noticed as like price per door, for example, in certain markets? Has it changed by a lot based on like an investment, let's say in Dallas, Texas, in comparison to an investment in Florida? Have you guys changed your approach in that way, and what you would pay per door, or there are other factors that you consider that maybe I don't know about? Or
yeah, you know, I pay attention a lot to price per door. Started looking outside of Dallas because the price per door started getting a little bit too high for me. You know, when I'm looking at something that's C-class property in a C, sometimes even a C- area, and they're wanting above 100,000 a door for it, to me, it just doesn't make sense. And it's hard for me to pay that much for something when I know I can build it for not much more, you know? So that's what kind of had me start looking at the markets outside of Dallas, and then into Oklahoma and those other areas where you're looking at more of 50, 60, maybe even 70 a door. And, you know, it's not all about the price per door, obviously. You know, Dallas, the reason that price per door is so high is because, I mean, it's an amazing city. You know, you got so many things, so many positives, and the economy's very, very healthy. So, you know, you need to make sure you don't just go somewhere because, oh, it's 30 a door. The area needs to make sense, the population, the economy, etc.
Yeah. And it's some of the topics that you usually talk about or share about is locating properties and due diligence. Are there any other things that you feel like most investors overlook when it comes to due diligence that maybe you guys are good at or you're strong in?
Yeah, I mean, you know, having a true idea of what your capex is going to cost. I think, you know, I've seen where a lot of rough estimates are made, even during due diligence. You know, to me, that's the time for you to narrow down your scope of work of what you're going to do for capex, to really know what deferred maintenance you're dealing with, what exactly it's going to cost you. if not to the T. Like, you know, plumbing sometimes can get difficult to know exactly what it's going to cost you, because you can't, you're not going to jet all the lines and then scope them and see exactly what's wrong with them. But you can get a pretty good idea if you take the professionals to come and inspect it during your due diligence. You can have a good idea. You know, multifamily, as far as big ticket items, it's pretty simple. You know, you've got your plumbing, you've got your roof, you've got your chillers if you have them, boilers if you have them. If not, then it's your individual AC units and water heaters, you know, the age of them. You got your foundation, your drainage, your concrete. What else? As far as big ticket, I mean, those are the ones that stand out to me. And then being detailed, you know, like you said, not overlooking stuff. You know, you want to walk each unit. You want to inspect everything I just mentioned. You want to make sure you inspect every single one, every single roof, every single boiler, and having the right person inspect it too. You know, if it's a chiller, you probably don't want to inspect it yourself. You know, you want to have somebody that's what they specialize in. So yeah, making sure you get the right eyes on it, and then when you're done with your due diligence, you have an exact number of what it should cost you to get that property. Another thing is, you know your upgrades. Know the price for your upgrades. Don't just keep it to the deferred maintenance. Know what it's going to cost you to add that gazebo and that paint all the exteriors and all that other good stuff.
Yeah, that's good. I'm keeping an eye out to see if anybody has any questions on the Facebook Live. Yeah, that's good to be able to walk every unit and making sure that you're inspecting all those big ticket items and considering, okay, what's going to be the deferred maintenance and what's going to be those appliances even or things that need to be upgraded right now. Because that would impact the money that you're going to invest on your renovation and also your CapEx and things like that. Yeah.
You got 100 units and you're thinking, oh, I'm not going to replace the flooring. And then you close on it and you're like, oh, you know what? I want to replace all the flooring. Well, I mean, that's $200,000.
No big deal. Yeah. That's that's good. What has been like your average turnaround for you and your team to buy a property, renovate it, and get it ready for the market or get it ready for tenants? Do you guys have a goal in mind as soon as you put it on the contract to by this certain time have it turn around?
Are you saying the due diligence or when you actually close on it?
When you close on it.
Okay. Yeah, I mean, for sure, you know, depending on the size of it and how large the project is, by the time we close, we've had several pre-construction meetings. We've got a schedule laid out. We know exactly how long it's going to take us to get it done. And we start executing from day one. You said on average, you know, it depends how significant the upgrades are that we're going to do and whatnot. But for the most part, on the heavy lifts, you know, by the end of year one, we're ready to refinance and get out of that bridge loan. So.
Okay. It's a good ballpark idea. Yeah. Do you have any, as we're wrapping up here, you have any things that make your company unique when it comes to like when you um, take over a building, you want to change the sign, or you want to send out letters or host um, any get-togethers for the residents to know that there's new management, new ownership. Do you have anything unique like that that you guys do?
Yeah, I mean, we definitely like the residents to know that there's new ownership, and um, one thing that shows that right away is day one where they're doing work. You know, we're fixing the roofs that were leaking, we're painting the exteriors, we're cleaning up the landscape. We're gonna try to, if we're gonna rebrand, you know, we're gonna try to get in there and do that as quick as possible. On the management side of it, you know, we have our letters that go out, letting the residents know, and then we quickly implement. We like to have a community feel. So I mean, we will have events laid out. Obviously during COVID, that, you know, that's a little difficult on some of the stuff. But we've still managed to have events here and there. So yeah, we want to show them right away that, hey, we're here to do work and take care of the items that have probably been bothering you. And we're also going to upgrade things at the same time. And then we're going to have a good time. You know, we're going to bring the community together.
That's awesome. I saw you shooting some hoops there with some of the residents. Yeah. Speaking about that, how do you balance work and personal life? What has helped you in that aspect?
You know, it's a struggle. It's been a struggle for me. I tend to always be in work mode, and I've had to learn to be able to shut that off, and to kind of just realize, you know, the reason for me doing all this work and building this is for my family. So it would be pretty ironic for me not to spend time with them because I'm building this for them. So, you know, the weekends for the most part, I try to keep it for the family, do some minimal work maybe, and then when I'm with them, I'm with them, you know, like 100%. Not on my phone, not like I'm there, you know, spending time with them. Yeah.
Physically and emotionally, there. That's good. The reason I ask is, like, I mean, I'm married now, and also to just figuring out how to balance the two, because they're both important. And
No kids?
No, not yet.
Yeah.
But we would like to down the line, yes, have kids. So what would, as we, I don't see there are any questions here. What would you say are 3 tips you will give to people that have helped you be successful? If you could pass on anything to other people.
Yeah. Trying to think of something different. I usually answer the question. I'll give you my usual answer, because it's one thing that helped me the most, and I kind of mentioned already, is just focus. So you know, especially now, man, with social media and everything that's going on, there's so much noise. You know, find what you're passionate about and what you want to do, and then focus and put your energy towards that. You know, even if it's going to be a side hustle right now because you got something else going on, that's fine. Just put all your energy and focus on the side to that one project, master it, and then, you know, depending on how you build it. And if you build the team,
Mm-hmm.
you can, jump over and start focusing on something else. So that's probably my number one. 2 is something we also spoke about already, but I'll mention again is systems and procedures.
Mm-hmm.
There's a lot of solo entrepreneurs that get stuck in the grind and the day-to-day, and years can go by. Trust me, I've been there. And if you don't step back and work on those systems and those procedures and start building your team, then you're only going to take it as far as you physically can. One person can only do so much. And if that's what you want to do, that's fine. Some people are content with that, and that's all they want to do is as much as they can, and they don't want to build a business. But if your goal is to build a large business, something you can sell if you want to eventually, or whatever it is, then you've got to learn to step back from the day-to-day and work on the actual business in the business.
That's good.
Yeah, and that's a tough one. I mean,
Yeah.
anybody that's these highly successful individuals that own these massive companies, they learn that. At some point they realize that.
The easy or the hard way, but they learn it. Yeah.
Right. And third is pay attention to your habits. I think habits are massive. Your routine, habit, whatever you want to call it. Your day is made up of several thousand decisions you make, whether you realize it or not. And those end up adding up and determining how successful you are in anything. So you can pinpoint some bad habits, then you can, and you're aware of them, then you can swap them out for some good habits.
And sometimes we don't realize that we do those things until we start tracking them down.
Right.
I appreciate you sharing, and I thank you for your time. If you enjoyed this interview and want to stay up to date with what Jorge is up to, you can follow him on Facebook at Jorge L. Abreu. You can also follow him on LinkedIn at Jorge L. Abreu, and on Instagram at Jorge Multifamily.
We hope you enjoyed this interview and got some value out of it to help you in your real estate investing journey. If you can take just a minute, please do us a favor and leave a review. Hit the like button on iTunes or whatever platform you listen to our podcast on, and subscribe so you can hear future episodes. Also, don't forget to check out our Real Estate Home Runs Podcast Community Facebook group, where you are able to connect with some great listeners. If you're an investor who is crushing it and want to share some information centered around passive income and real estate, please contact us. Hit those home runs, and we will see you next time.